So we have this interesting release from the SEC that was on March 23rd of 2023. And I'll fix this in just 1 second. Bam, done. Make sure you share out the stream too. That'd be super helpful, and hit that like button. Exercise caution with crypto asset securities. Investor alert. This is sec.gov, an investor alert and bulletins. Number one, those offering crypto asset investments or services may not be complying with applicable law, including federal securities law. But when inquired more deeply by Coinbase on what exactly those securities laws were, of course, they pulled the old tax logic on you. You tell us what you owe us, and then we'll tell you if you're wrong. You know what I'm saying? You know what I'm saying? This is how they can broker some deals on the outside. Maybe some back chain deals going down. Who knows? This is the one that I thought was interesting, was their attack on proof of reserves, which I actually completely agree with, by the way. I think proof of reserves is, for the large part, senseless. Proof of reserves is a term crypto asset entities, including trading platforms and or entities that issue crypto asset securities, used to describe a voluntary method for offering evidence that in the aggregate an entity has sufficient reserve assets to cover what is held for customers and or accounts at a given point in time. You know what's really weird? In this entire setup that I have noticed, we have these centralized exchanges that are operating as if they don't have to adhere to the principles of cryptocurrency. The reason why cryptocurrency sets itself apart is because it's immutable, it's transparent, and so on. We have this thing called Bitcoin. We can go see how much Bitcoin each address has, and we can verify that. But when they pull all that stuff off chain and go that route, it really doesn't end up being any different than the banking system. So I really don't have any problem with the suggestion to move yourself off of centralized exchanges. Now, we've talked about this before. We're in an interim. We're in a transitional phase. That transitional phase is moving from traditional finance and the banking structure and the Federal Reserve into digital finance, and whether or not we end up with CBDCs or a decentralized currency like Bitcoin, or probably Bitcoin, is yet to be seen. The fact of the matter is, though, there's this transitional phase that we're in right now, which kind of requires some sort of trading between the two systems. And from that perspective, in my humble opinion, there's one thing and one thing only an exchange should do, and that is to exchange the cryptocurrency for a fiat currency and then be able to bring it back, and always have a pairing of that is equal. And there's no other service that they need to do. To make their money, all they should be doing is charging a transaction fee, of which they already do. In my humble opinion, any centralized exchange, or all centralized exchanges, should not have their own token. This does include things like previous sponsors from Crow. This is why I never talked about Crow as a token. We don't, on this channel, support any tokens on or run by exchanges, because they create, obviously, the issues that we saw with FTX. And I've been saying this all the way back to 2016. Never been a fan of centralized exchanges, and I think that you should hold a majority of your cryptocurrency within your own wallet. Of course, that begs the question, well, who's going to protect me if I'm too stupid to know how to recover my keys? Nobody. With great power comes great responsibility, and you need to own up and learn how to manage your own assets. That's the entire point here. So I'm not going to go into that whole argument. If you are unintelligent enough to not be able to participate within this ecosystem, then you need to learn. We'll go say learn to code, but learn to crypto, bro. I mean, I don't know what to tell you. It's not like you're any safer. In fact, all you do is open yourself up to more attacks when you are trusting someone else with your custody. Of course, the sales pitch here from the SEC eventually will be, well, we'll protect you. Just utilize our central bank digital currency. Do not utilize Bitcoin, and we'll give you some sort of insurance. Of course, this insurance comes with great cost, because If essentially, as we're seeing with the banking system now, it ends up devaluing the rest of everybody's currency when others are irresponsible with said currency. And this is the position that we've ended up in, right? With the collapse of the banks and SVB, et cetera. And basically removing all of these barriers to the max amount of reimbursement for lost funds in any of these collapses and so on. And the exception, or not the exception, but now the possibility that we'll just go ahead and bail you out. The government will bail you out. How will they bail you out? The money's not real. It's not like they have backed assets or gold sitting in there somewhere. They're just going to print the crap out of it, thereby devaluing the dollar of every responsible citizen for the benefit of the few very rich. Hence the issues that we're running into. But in this particular case, I don't disagree. I don't think that proof of reserves is something you should rely on within the cryptocurrency space as it pertains to centralized exchanges. Crypto asset entities may be offering these types of assessments as a way to satisfy customers that their funds are safe and available upon demand. However, these types of services may not provide any meaningful assurance that these entities hold adequate assets to back their customer balances. Funny enough, neither does the Federal Reserve. So there you go. Further, crypto asset entities might use these in lieu of audited financial statements in order to obscure and confuse customers about the safety of their assets. For example, a proof of reserves typically may only provide a snapshot of what is, for example, held by an entity in certain wallets or accounts or backing customer assets as of a point in time. May not disclose management's activities during the period between the snapshots, for example, use of customer crypto assets in crypto asset lending or other activities. Remember what was happening is you actually had individual entities moving. I'm going to hit my mic. I'm getting excited. Remember what happened with crypto.com, and I believe it was like Kraken, something along those lines. A few of these exchanges, what they were doing is they were passing reserves back and forth, taking the snapshot, and then you could see it move back out of their wallet. So this is happening. So when we do see these alerts, this is true. Does this mean you don't participate within cryptocurrency? No, it means you don't participate within cryptocurrency that is tied to an outdated system. Does not tell customers the whole story about the entity's liabilities and, for example, whether the customer has to stand in line behind other creditors if the entity fails. And you will always be standing in line behind other entities because the other entities have more influence, more power, and more money. So if you are Joe Blow with 10 grand sitting in your account and you just lost your entire life savings that you were trying to save up because, God forbid, you didn't pull it out of an exchange, well, I'm sorry to tell you, dude, but the dude with $2 million held is going to get paid out and made whole before you are, if you ever get made whole. And in the case of cryptocurrency, a lot of times what ends up happening when these companies pay people back, they pay them back at a time when the price of cryptocurrency is low. So in the case in point, right, is exactly what NiceHash did back in the day. They had a hack. Some people still think that that's internal. You can throw on your tinfoil hat or whatever you like. Point is, it really doesn't matter. Optics from the outside is this. NiceHash gets hacked. Nobody gets paid back until the bottom of the market. So if NiceHash is hacked, loses all the Bitcoin, conveniently into a cash position for themselves, waits for the market to go down, buys the Bitcoin back, they end up basically shorting the market in a very devious way. And this is kind of the workarounds that you see when these entities fail. And that's if you ever get paid back. When is Mt. Gox paying everybody back? Well, they're paying everybody back now when the market's back down, right? It's so ridiculous. In addition, a proof of reserves is not as rigorous or as comprehensive as a financial statement audit and may provide any level of may not provide any level of assurance. For example, audited financial statements typically require audits of a complete set of financial statements performed by a registered public accounting firm in accordance with the PCAOB auditing standards. With so-called proof of reserves, there are no specific audit requirements for the engagement or the information reported, allowing for an entity full discretion to manage the terms of engagement. The extent and frequency of the assets performed around the customer assets, the determination of the reserves, the level of assurance provided, the type of third-party assurance provided engaged, and whether the results are made public, including the extent and format of the information shared. Investors should be aware that this level of management discretion undermines any suggestion that proof of reserves offers protections similar to a financial statement audit. And like I said, by and large, I completely agree with this. I have no qualms about saying like, hey, like, look, proof of reserves is not something you should be warm and fuzzy about. It's not something that you should trust, right? At the end of the day, these are individuals trying to make money. They are going to shift and do what they can to do what's best for them. I mean, just in nature. And I think that your primary goal here is to try to only give them what they deserve, which is the transaction fees for basically moving between fiat and crypto. And that's it. There should be nothing else going on there. If you want to get into DeFi, if you want to learn that type of stuff, then go learn that and learn the contracts and gain some more responsibility surrounding that subject. That's my only point here. Now, the SEC did go on, I think, to basically talk about some registered entity or securities, right? SEC registered entities, crypto asset securities, trading platforms, or other intermediaries may offer a combination of services that are typically performed by separate firms that may each be required to be separately registered with the SEC, a state regulator, or an SRO. Here's the problem. I don't think that under any circumstances, with the amount of new tokens, the amount of new coins, and the amount of new projects built onto the blockchain, that the SEC is capable of even putting a dent in the amount that needs to be audited. So as we move faster, like Bitcoin has moved extremely fast. When we talk about transitions into new technologies, right? We talk about like the agricultural age, which took centuries. We talk about the industrial age, which took a century. And then we start to talk about, the technology age, the digital age. And what we've seen is a very fast-paced moving transition, into, of course, like the tech bubble and all that, to where really regulations surrounding that are so slow that they can't really keep up. And now with it moving into finance, specifically digital currencies, it really is getting to the point to where it's not really feasible to really think that they have the capability to do this and regulate it properly. It just is how that is handled. And I just don't see it happening. How many new coins are being created per day? How many new tokens, for that matter, are being created per day that need to be regulated? And I think that it's one of those things where there will be examples made and it may be cut off it'll try to be cut off like at the source, right? So your transfers from one payment system into another payment system, right? From crypto into fiat. That's the only way I see any regulation can take place that would stop it all. But if they're going to try to regulate each individual currency and then allow Bitcoin, it's the Wild West, bro. There's no way to do that. There's no way they're going to be able to figure that out. And so you end up in a kind of this age-old position where, the governments can't keep up with the shifting technology. And this is really where governments do end up collapsing and having a lot of issues. I've been reading Soft War lately by Jason Lowry. Space Force Coast to Coast. Anyways, one of the stories that he told in there was Constantinople, and they had an engineer in Constantinople that went to, I don't know, the emperor, the king, whatever it was. I can't remember what they are in Constantinople. Anyways, goes to the emperor. Let's call him an emperor. And he says, hey, I've invented this new thing, cannons. right? I've got this new thing. They're cannons, and these cannons, like, they shoot these big things and we can attack from afar, and they're super awesome. And basically the emperor goes, no, we're not going to invest in that. Our army is strong. This is all we need, right? Well, comes down to it, right? And within a year, Constantinople falls in battle to an army utilizing cannons. And it goes to show that the lack of ability to properly adopt new and emerging technologies can be the downfall of any empire, government, or society. And software I highly recommend. It is kind of a call to arms surrounding what I would call the weaponization of Watts. This is the best way I could explain it. I am working on a video of it. I've been marking it all up. My book's all written over. I'm going to try to put it all together. It's a lot to parse out, but that was a quick story that I kind of wanted to give in relation to this real quick. In sum, investors in crypto asset securities should understand that they may be deprived of key information and other important protections in connection with their investment. Not your keys, not your crypto. I don't have any problem with the education surrounding that, right? Investments in crypto asset securities can be exceptionally risky and are often volatile. Over the last year, the crypto asset space has been exceptionally volatile, and a number of major platforms in crypto assets have become insolvent and or lost value. But what's happening now? Right? What is happening now?
Established in 2017, Octominer is an international mining hardware company. They manufacture and engineer the best mining equipment in the industry and supply rigs to some of the largest mining farms around the world. Their GPU mining rigs also integrate with the top crypto operating systems like HiveOS, MinerStat, and Simple Mining. All parts come with an international 1-year warranty. Exciting news! They will be adding ASIC miners for sale to their website soon and launching a new product built specifically for ASIC home miners. Please visit octominer.com or email support@octominer.com for questions.
The fact of the matter is what we're seeing now is with the distrust of the banking system. Oddly enough, we've seen a pump in cryptocurrency. Now, a lot of that I still think is due to the shift from the Binance USD, BAUSD, by Binance into Bitcoin. I do see kind of a couple steps back, but I think a couple steps back within cryptocurrency away from stablecoins is a positive thing. Meaning, I think that when you look at it from afar and Bitcoin adoption, what you really want for cryptocurrency in general, I think, is more pairings of Bitcoin with other altcoins. And I know we've talked about decoupling. I know like a lot of Ethereum investors and so on want to see this decoupling. I do think a decoupling specifically as it pertains to Ethereum and Bitcoin may be taking place in the near future, primarily because I think that Ethereum is still going to tie itself strongly to outside assets, while Bitcoin will become the de facto for your proof of reserves and your transaction coins. And this is going to be an interesting kind of turn of events. The big threat, of course, that Ethereum has with all of this going down is going to be the fact that a majority of their nodes are controlled by centralized infrastructure that is influenced by the US government, i.e. AWS and so on. And they are technically, due to their move to proof of stake, going to be considered potentially a security. So if they don't play by the rules of the SEC, of the federal government, of the Federal Reserve, if they don't play by those rules, they are at risk of being, in more trouble compared to something like Bitcoin, where you have a decentralized network that it is actually costly to the government to try to prevent, right? This is something that like software talks about, is that in this particular case, we have a strategical advantage with Bitcoin in the fact that to attack Bitcoin, it costs a lot of money. And so for any one country to go against Bitcoin and try to attack it will be exponentially expensive to the point to where it's not worth it, right? And that only grows more and more with the price and the adoption of Bitcoin, along with, of course, the hash rate on the network for Bitcoin. And it brings this kind of interesting perspective to light, at least from what I'm seeing, where Bitcoin really in and of itself is kind of off on its own, because it's grown to this thing that like literally can't be attacked. If we talk, like, I love GPU mining, I love mining smaller coins and all of that, but their price to attack is too low in a lot of cases. Some competitors that would probably be extremely difficult to take down, of course, would be something like Monero, just because of the amount of botnets that really leverage that. And that's really getting into the cypherpunk realm. And I think like it would be nearly impossible to attack Monero as well, outside of like vulnerabilities and bugs that could be found down the line, but it's just not cost effective, right? So they do go on to list out volatility and illiquidity in the crypto assets market, the potential for a company holding of your crypto assets to fail or go bankrupt. We can solve that by holding our own cryptocurrency. Unpredictability, including that the market for a particular crypto asset security may disappear altogether, or crypto asset security may no longer be tradable anywhere. And that is definitely a worry. That's why you kind of want to stick to the big boys, the proof of work coins, really, at the end of the day. Here's the thing that is, even there are ways in which we've seen proof of work coins get rugged, usually some sort of tie to a token, devs stop working on it, that sort of thing. There are a few cases though where I've seen though an interesting revelation when it comes to proof of work, which means which is this. Essentially, even if devs completely abandon a proof of work project, it is feasible that the miners can keep that project alive if that project wants to stay alive. Or in a lot of cases, you can even completely fork off of that just in case you distrust the developers. One time this actually happened was in the previous bull run between a coin called Sumo Coin and the developer of, I believe it was XMR Stack. And what he did when basically the devs abandoned the project and were kind of like putting in a position of really hurting the miners and everything, is he forked that over to something called Ryo. Now, Ryo hasn't really kept up with production, right? So Ryo hasn't like had a bunch of like development done to it or anything like that, but it kept it alive and it kept it on the markets and it kept it in availability for miners to exchange and get out of. And, people are still mining it to this day. So proof of work really has a lot more legs underneath it, as opposed to something like a token where you have a lot of, for lack of a better term, duckery going on, where you may have the burn mechanisms, lock mechanisms, anything and everything that can be built into smart contracts to manipulate the currency in the favor of a developer or a long-term holder, right? And that to me says, if I'm going to hold anything, it's at least going to be proof of work. Majority is going to be the strongest one that's the most difficult to attack, i.e. Bitcoin, because watts matter here. War of the watts. And that is really how I look at this. Sometimes high concentrated and opaque ownership and control structures. I think a lot of that has to do with, once again, when we get into speaking about tokens in specifically, your Shiba Inus, token, ERC20 tokens, the tokens that are built on top of other chains, right? Enforcement of laws and regulations by federal, state, or foreign governments that may restrict the use and exchange of crypto assets. Now, of course, this does come across as a little bit of a threat, right? It's like, don't participate in this, because if you do, we may decide to stop you and say you're not allowed to use it anymore. The thing is, and I've said this, over the past week on my Twitter, is like, the adoption rate of cryptocurrency is so fast, and the amount of infrastructure alone for Bitcoin, just Bitcoin, and the amount of investment in that tells me that, if you wanted to try to shut down that line of income, you're going to have a hard time, right? I equate it to the war on drugs. I think it'll be completely unsuccessful. People will participate in the cryptocurrency space if that is what they intend to do. And you're not going to be able to control 7 billion people on the planet and tell them to not participate in it. It's just not something you're going to be able to regulate fully. Once again, I do think that you see potentially complete cutoffs, I think, after they keep trying to play with it, right? The attacks at first are going to be like, well, shut down this coin, shut down that token, prevent trading of that token, tell Coinbase they can't do this, you can only do Bitcoin. Well, what's everybody going to do? They're going to utilize DeFi, decentralized platforms. They're going to utilize VPNs to go, to different geographical regions to trade the cryptocurrency that they prefer, and pipe that back in if they want. They're going to use mixers. They've tried to shut down as many mixers and so on and so forth. But at the end of the day, you can only make so many examples, right? Before it's like, okay, this clearly isn't working. How long does that last? How long does, this attempt or these attempts, on kind of stopping the crypto adoption happen for? I don't know. Will the fear be enough to stop the general public from participating? Potentially, right? But in the case of a complete collapse of the US dollar, or just the case of people not having any value in whatever currency they're participating in, if people aren't happy, they're going to utilize other systems, especially in a free market, right? So it really, like, if the people are fat and happy, then regulation makes sense. If the people are struggling, then regulation doesn't make sense. You're pissing in the wind. You're just not going to do anything but piss on yourself at that point. Once again, I go back to like software and the argument that these technologies need to be adopted and utilized as part of a strategic point. And I do think that, ironically enough, we are starting to see that adoption. We've seen a complete 180 in Russia and China on Bitcoin and cryptocurrency in general. It's been very pronounced in Russia, to the point to where they've, removed, they've put a tax holiday in for all cryptocurrency, right? So you don't have to pay taxes on it right now. And they've rebuilt like the infrastructure for mining and so on. I do think that is specifically an economic strategical move from them. I don't think that it is. Look, I don't think that it is necessarily like a full-on negative, and a lot of people say like it's lost this attempt of a dictator. No, it's a strategic move that you should be paying attention to, and to brush off and say like, oh, that doesn't matter because it's Putin or whatever, and he's a bad guy, and so whatever he does is wrong. Well, if he has the cannons and you don't, you're going to die. So that's stupid. It's ignorance speaking if you say that doesn't matter. Fraudsters continue to exploit the rising popularity of crypto assets to lure retail investors into scams, often leading to devastating losses. And this is true, right? Ponzi's, pyramid schemes, all that sort of thing. Kind of ironically, when we look at the Chinese yuan and their adoption of basically an expiration date and a burn mechanism within it, and the adoption that the UK has said they're going to copy that platform, is pretty hilarious to see that, in my humble opinion, everything in crypto that is the scammiest and schemiest and so on is being adopted by central bank digital currencies. That being said, like, I can't argue that is not there, right? We have the hexes, we have the safe moons, all these types of things, right? That's why you see Richard Hart kind of trying to distance himself from hex and so on, all this craziness. They talk about celebrity endorsements. Now, we have seen, of course, examples being made here. I think Lindsay Lohan's in there, Jake Paul's in there. Somehow, what's the NFL cheater, Tom Brady? Somehow he's not in there, probably because he cheats at everything. I'm a Cowboys fan, sorry. Having an investing plan as well as understanding your risk tolerance and time horizon can be critical to your investing and success. Hey, you want to check that out? Check out my investment plans over on sonofatech.com on the e-course. And also I cover a lot of that over on sonofatech.locals.com. So you can always check that out if you're interested. So they talk about like, you know, creating investments, understanding risks and all of that. I think this is good education as far as that's concerned. Once again, like pot calling the kettle black in a lot of this, but I think like overall, you know, it was stated or presented to me as a big negative, specifically this announcement, but I don't see it as a huge negative. What I do see it as basically potentially a tool to be utilized for removing your freedom for participating. Look, here's the deal. Education's key. And I think that's where we start with. And so seeing, you know, education in this form for the public, I don't think is necessarily a bad thing. I think if they explained a little bit more and advocated for self-custody, that would be cool, but I can't really expect that in this particular case because there is that threat to the Federal Reserve if we talked about it completely transparently. Thanks for checking out this clip from the Crypto Mining Show. You can check out the full episode here or more crypto content down here. Also, I'd like you to check out my locals page at sonofatech.locals.com where you can become a member for free or choose to be a $5 a month supporter that unlocks additional content.